Hi, all. This is Dr. Gregory, and this is Accounting 667 Advanced Audit. And today we're going to look at the first of our last two chapters in our text. Chapter 15 is Consulting, Litigation Support, and Expert Witnessing, Damages, Valuation, and Other Engagements. So these last two chapters are going to be a little bit of a hodgepodge of other things that we can do. So we're going to go over forensic accounting engagements, what commercial damages are, what valuations are, and what losses are associated with personal injury. So forensic accounting engagements can be just about anything. There's multiple guidance that's provided for you. One, the Fraud Examiner's Manual has wonderful descriptions of the different types of engagements. And you can also look at some of your sites such as FASB, GASB, AICPA, SEC that can give you some background as well as to what forensic accountant services can be done. Now, there's, like I said, multiple different services we as forensic accountants can provide. We can provide values or dollar values for economic damages to a company, such as breach of contract. What if you have a vendor who suddenly breaks contract with you? That could be an economic damage. You might also be experiencing, and this is not a far out example, internal espionage, where there is stealing of secrets going on and selling those secrets to competitor companies. We get involved with family law, mainly through divorce cases, where we're doing asset determination of divorce cases. We might also be working with cases involving estates and perhaps the valuation of an estate. We can do other valuation services, such as identifying the value of intellectual property, patents, business sales. We can do risk engagements, such as prevention and detection of business continuity, terrorist, ransomware, and security prevention. And then we could do what most people consider forensic accounting to be, alleged fraud. And it can be established through the government, from companies themselves. They may want to have their company investigated. We have a nonprofit recently that has been undergoing in the Las Vegas area some turmoil and loss of employees. And the county has now determined that a forensic audit is going to be performed on that nonprofit entity that services the county in Las Vegas. Insurance companies may employ you to look at arson cases, valuation of buildings before and after arsons, OSHA compliance. So the list is totally expansive. And that means there's going to be a never-ending need for people in this type of business. Now, your professional responsibility stepping into these roles as a forensic accountant or a fraud accountant, set up an engagement letter. Don't agree to do anything that is not written down on paper, because it may catch you in the end. You want to be very clear and have clear delineation of the roles and the responsibilities, not only of you, but of what the client's role and responsibility is. For example, providing financial records that you need, providing you access to interview employees, as well as other staff, such as maybe some specialists that you may want to bring in. Note what you will and will not be doing. Make sure that the scope of your engagement is extremely clear. Second, We do not take on cases on contingency. It's not that we're going to work for free and then you win the case and you get a percentage of the fees for winning. It needs to be based on hours worked, and that's based on our code of conduct. Now, you can't ask for a retainer, for example, an upfront payment of, say, $2,000 or whatever you negotiate in the engagement letter with. Now, you can get that retainer and then you provide periodic reports back as to the hours you worked and what you use those hours to do in the performance of that job. So you can't ask for a retainer. You cannot advertise contingencies. You could, should, must use experts in the industry if you need to. If you're going to audit the valuation of a jewelry company, you will definitely want to get certified gemologists involved, unless you have a thorough background in identifying the value of semi-precious and precious gems. You might want a metallurgist that is going to help you determine, for example, whether or not a particular metal that was used in building a product could sustain the load that was advertised. You might need IT specialists to perform data analysis, big data analysis, or just to gather data from a computer. You may want people in the construction industry, the airlines industry, the building industry, whatever you need. Use those support teams. They make you and your case much stronger. And finally, follow the appropriate codes of conduct. Depending on what you're doing, you may need to seek out the AICPA, the ACFE, the IIMA, your state board of accountancy, etc., that will provide you guidance in what your code of conduct is. Another area that we can be employed in is through commercial damages. As I said before, breach of contract, internal espionage, the stealing and selling of confidential proprietary information, performance for pay. We can also get into commercial damages when it comes to fire, arson investigation, a loss, sorry, that's a misspelled word, a loss of profits, or the reduction of the value of a business. And we're usually hired to determine what damages are. So the prosecution may hire you to look for the highest, most inclusive amount of damages. The defendant may try to, you might be hired, or you may have to counter a defendant who is trying to minimize the damages, or perhaps prove that there was contributory negligence on both sides that exacerbated the damages. Now, a couple of different terms we want to use is liability, and liability could be one of the parties is responsible for all or part of the damages. And that's where that contributory negligence can come in. They may be able to prove that while the plaintiff was damaged, they may have contributed in some way through some type of negligence to those damages. And finally, damages are due to the actions or the lack of actions by the offending party. So somebody may sue for harassment, for example, and they're suing for damages, and the other party, the defending party, says, well, we have our code of conduct out there and people are not supposed to do that, so it's not our fault. So it could be that, yes, they had a code of conduct, but maybe they didn't enforce it. Maybe they didn't train people on it. So that could have contributed to the offending party. The next thing we want to do is when we're identifying damages, we want to look at the length of the loss, and it could be based on temporary or permanent losses, depending on the nature of the damage. If there could be loss due to espionage, that could be permanent damage to that company. They may have lost some kind of secret that they didn't want their competitors to know about, and now the competitors may have that permanent advantage. It could be the impact of the economy, or the industry itself may have been a contributing factor to those damages, such as the recent pandemic, natural events, the economic crisis, such as the mortgage crisis of 2006 through 2008. We might be able to look at some economic indicators out there that may have data that supports the damage to their business. We'd also want to use ratio analysis and look at ratio analysis to determine the changes in profitability due to that damage. Now, you have to always walk in that with that caveat that all things have to be equal. So when you're determining changes in profitability based on this damage that was incurred or alleged, you have to make sure that you take out any factor that might not be contributing towards that damage, but may still be affecting profitability. For example, if we look at the internal espionage, we could look at certain ratio analysis within our profitability to see if other industries were profiting off the damage of the loss of the knowledge that we had through that espionage. But if there were other factors going on, such as maybe a new product or service came out to compete against your product and service, and that affected profitability, you have to take that factor out and only focus on the scope of the damage itself. Now, you're going to have to quantify the loss, of course. And you might also want to use some non-financial information to help you out with that. It could be the loss of customers due to defamation or breach of character, a breach of contract, someone violating a non-compete clause and stealing customers away from you when there was a written agreement when the employee terminated that they would be in a non-complete arena for a period of 2 years. It could be that defamation created bad customer reviews of products and services, or you might have had a loss of donors. So you can use non-financial information to help support the financial damages. Make sure you are communicating and defending those results, making sure that there's nothing else out there that can be contributed to those damages, to the loss of profitability, other than those damages. And you may need to bring in insurance claimers if there is insurance against these types of actions that has been purchased by the company, that we have to use those insurance claims to offset those damages. Another area that we get involved in all kinds of reasons, is valuation. Valuation usually of a business, or valuation of the percentage of ownership of a business if you have multiple owners. Or it could be valuation of specific components of a business or specific assets of a business. Say you're thinking you have a business that has 4 business segments, and the company is thinking of getting rid of one of the segments of business. Well, you want to do a valuation of that business before and after to see if it is really in their best interest to remove that segment of business. We could be doing it because of bankruptcy of a business, a divorce, when person owns a business, and they divorce, there could be divorce components in there. We could be dealing with probate if there is no will. We could be looking at purchase and sales agreements. Again, valuation because of fraud. Or we could be looking at succession planning of small and medium-sized enterprises. There are lots of certifications that you can go for that give you that added level of education and knowledge, such as the accreditation in business valuation or an ABV certificate that's provided by the AICPA. You can study and get a National Association of Certified Valuation Analysts. And there's other education opportunities out there. So we may not teach you business valuation, but there is a lot of training and education you can get in business valuation. The fourth area we're going to look at is personal injury, wrongful death, and survival actions. Now, personal injury usually results in a loss of current and or future wages and benefits. The levels of disability can vary from the inability to work to the inability to care for yourself or the home. You may be requiring outside nursing or rehabilitation care. And you may be called in to investigate fraud that occurs in workplace injury claims. We've often seen in the news someone went out on a workplace injury and then they were found the following week up on a roof doing construction work. So many times employers will hire investigators to go out and investigate and determine if there is fraud as a result of an injury claim. Under wrongful death, it's much the same as personal injury. It's loss of future wages and benefits to the surviving family members, a loss of the inability to maintain their home because of the loss of maybe the primary employee. There may be a need to provide education and training for survivors to go out and get jobs. And there may be a need for counseling services as a result of a wrongful death. If you have any questions, please reach out to me through the class questions for the good of the class. Post a question to me on Halo or set up a 15, 30, or 60-minute meeting with me on Zoom. Have a great week, and I'll see you in the classroom.